Hello, traders. It is Wednesday, March 18th, and we are 3 hours into trading. Let's see what the market's doing. Been a very, very choppy day. So we opened on this long green candle right here, which actually, when I see a long green candle like that, we didn't spend but maybe a couple of seconds down on that low, and the market rallied instantly through that prior day's low all the way up to this 243 level and then backed off a little bit. When I see a candle like that spends hardly any time at the opening price, I discount it. I don't even count it. I use that this closing price right here as the opening price. So we actually did come down and we took out the low, but we found support here, and that support happens to line up with the low of the day from Tuesday. So we're getting multiple support here, which is good. We've got 1, 2, 3, 4 tests of the low now. I think we're going to continue to grind at this level, hold that support level for about the next 90 minutes. Why do I feel that way? Because the FOMC statement is due. I can't remember when an FOMC statement has been less meaningless. Typically, everybody sits on their hands and waits for the Fed statement. I think that's happening right now. But what else can they do? We've seen a $1.5 trillion liquidity injection into the market. We've seen a $700 billion quantitative easing program that they launched, and they cut interest rates to 0%. How much more dovish can it be than that? I don't know what they could possibly say except that we are doing everything possible. We've also seen fiscal stimulus. There are going to be 2 checks sent out, as I understand, $1,000 in April, $1,000 in May. So the government realizes with everyone sitting home right now, trying to practice social distancing, that they need cash to pay their bills and they need cash in hand right now. I think that as long as the coronavirus continues to decelerate in terms of the new cases in the next 2 weeks or so, everything will be fine. People will be able to shoulder this unemployment stint that we're in currently, and the market will gradually recover. Time right now is critical, and we need 2 or 3 weeks to see how all of this plays out. Now, this morning I was looking at a chart of South Korea. Can't really trust the numbers out of China. Now, their number of new cases has slowed over the course of the last 3 weeks to where it's almost zero now. But South Korea, I think, is giving more truthful and accurate information. And there we've also seen that after 30 days, so 30 days after they've had 100 cases or more, that's when you start to see a slowdown in that growth rate. So we're still a couple of weeks away from that. If this works, it will set the tone for the rest of the year. And we'll start to see everything gradually come back maybe by the end of April. In May, everybody starts returning to work. The economy gradually starts grinding higher. So this is a very critical point. The government is going to have all sorts of bailouts for various industries that are really hurting badly from all of this. You're going to put cash into people's hands. This is just a bridge loan to get us through this coronavirus right now. So hopefully everything will play out like that and the virus will actually start to go more dormant as warm weather comes in. This all has to buy us precious time, and that's what all this is about. Precious time to develop vaccines and effective treatments, precious time so that those who are sick can be taken care of without flooding the hospitals. So, as you can see in the market right now, we had these candles early in the day, red, green, red, long green candle, long tails above and below, long tails above. These are a sign of indecision. There's no direction, there's nothing organized going on here, just movement all over the place. I did try and get a short in right in here. I saw this breakdown of this upward sloping trend line. I had a big 10P cross, which is usually very, very reliable. So I took my short position here and got stopped out right on that long green bar. So lost about I think I lost about a point one point $1.20 on the SPY there, and Ultimately, I missed this decent short because I had already seen all of these wild moves in here. I just did not want to trade. I also tried to get long in here on this move right up here. We had 1, 2, 3 tests of the low. We had a 1 OP cross in here. We had a nice little breakout up in here. We had a bullish hammer right there, a nice long green candle in here. I started to scale into my position on this long green candle in here and was stopped out for a scratch right in here. Tried to get long again, stopped out for a small loss. I'm down about $2 on SPY today. It's okay. I've been up about $7 yesterday, or 70 S&P points, and about the same Monday. So we've been making a lot of money. We've been nailing stocks. Today is just not the day. We've got quadruple witching coming up. There's a lot of position squaring that's going on. So you see a lot of big size and you think, this is it. Here comes the size. This is going to be the move. No, very quickly reverses. So you rarely get two candles in the same direction together. This was the exception right here. And when you do, you get an immediate reversal. There's a couple candles together, immediate reversal. This is a very, very low probability trading environment. And it is critical as a trader that you're able to identify these instances because it means don't trade. There will be times when no trade is the best trade that you can do. And right now, you can look at this little sell-off right here and go, yeah, that looks good. That looks good. Yeah. We're going to take out the low here. Yep, this is going to be a good one. I can almost guarantee you that by the time this video is done, we're going to see this erased and the S&P will be up here. It'll probably be 20 points higher. And anyone with decent discipline or a stop strategy would be stopped out of that trade for a loss. We are going to chop around between the low here, which is approximately 238 to about 241, and we will be back and forth in this range until the FOMC statement. That's how I'm playing it. That's what I think is going to happen. I'm not trading. I don't have a lot of trades on right now. I did get short. I am long CTXS. I do like that stock. I like it on a swing basis. You know that I've liked it. I told you it was a good stock over the weekend. Opened Monday morning at 106 and it's been off to the races up to 137.50 today. I am long at about 132.50, right up in here. And so I've got a ways to go, but I don't mind holding it. I think this company is going to do really well. They do video conferencing for businesses. Every business right now has been mandated in the state of New York. You cannot have more than 50% of your employees on staff. And so they're almost mandating that you use some type of video conferencing tool. This will also be used by universities as well. So I think CTXS is one of those companies that does really, really well in this environment. They've got a ton of cash on hand. So they can weather this storm because they got a lot of cash. So I'm long that stock and I'm going to just sit tight with it. I do have a limit in to try and scratch the stock just to get to a flat position. Let's see, what else have I done today? I also shorted ALLY. That was a really nice short early in the day. I got short right up in here, and then I covered that short. I made about 40 cents on that, 35 cents, something like that. Nice trade on a $14 stock. You can see how that stock has continued to get nailed today. Lots of weak stocks. But along with every one of these weak stocks, you have a risk of having these huge spikes upward. So if you short at the wrong time, there's a lot of pain on some of these short covering bounces. So you have to be very, very careful. You can see that nice long red candle that was looking like it was going to be so good and breaking below support. I'm going to get short. I'm going to get short. This is the one finished with actually a bullish hammer. This looks like it could get going, but you'll see. This is a very low probability trading environment. So what do we do? Where do we go from here? Well, there are stocks with relative strength, and the reason I'm going to show you relative strength stocks is because I feel that we've got 1, 2, 3 lines of support here. I can't imagine the FOMC statement's going to be anything but dovish, so there should be a little bit of support here. Here's another thing that is actually good about today. Now, yesterday we had a big rally. We had a 170-point rally. That was beautiful. Closed above the high. Everything looked great. Almost closed on the high of the day, and then woof, gave it all back today on the open. Here's the one encouraging thing that I see, and that is that the range is starting to compress. You can see that 244 is roughly the high of the day, and somewhere around 238, let's say 237, is the low of the day. That is a 70-point S&P 500 range. You won't hear it from me very often, but that is a fairly tight range given recent price movement. A 70-point S&P 500 point range. A 70-point S&P move in a day, I can't imagine that I'm calling that a tight range, but in this environment, it actually is. So hopefully we'll start to see some stability. We'll go out to the daily chart and see what's happening. Now you can see a lot of long tails, which tells us that the intraday price movement has been incredible. So we'll see how the day plays out. Right now, we do have the market at a new relative low. It's challenging that low from the prior day. So we have to respect that. It's a good time to just sit and wait for things to play out. Very, very choppy price action. Let's go in and see what's moving higher. Let's see if we can find some stocks that actually might do well so that if the market does bounce this afternoon, what might we consider buying? Well, I've already shown you CTXS. I like that one. And that looks like it's coming back nicely. ZM is in the same space. I like that one. See what that one's doing. That one also looks pretty good. You can see how it's compressing here. It's been able to hold this gain. So this is probably a good stock. RAD. And a lot of the drugstores actually look pretty good. RAD is one that we've been trading really well. You can see the relative strength here. I'll put up that 1 OSI indicator. And you can see how the market's been down, down, down. There's your orange line above zero. You can see how the stock is compressing near the high of the day. That's a nice stock. Walmart has been exceptionally strong. Any company that sells food has been doing really well. Walmart, you can see also compression. Put up that daily chart. Look at that spike through horizontal resistance. So Walmart is actually doing well. Target, I believe, is actually doing well also. They sell food. Not to the extent that Walmart does. They've been doing okay. And let me take a look here and see what else we've got. WBA is Walgreens. And that's also been a good stock. Here you can see compression right in there. A couple long tails under body. It's been able to hold this price level. Go to the daily chart. You can see Walgreens is trying to get going here. Put up the moving averages. You can see that the 200-day and the 100-day, it still has room to run in here. CVS, another similar play, also will be doing well. All right, good relative strength there also. Now we could take a quick look through this list and see if anything new has come up. ACAM has been strong. That is breaking through to a new high of the day through the prior day's high on a day when we've got market weakness. Let's take a look at that daily chart. Now, ACAM handles a lot of streaming video. Could be a lot of demand for streaming video. If everybody is home, what are they going to do? They're going to watch movies. ACAM has good relative strength. That's one to watch. Netflix, another similar play. You can see how Netflix is down below that 200-day moving average. So we need to see it close above that and above the 100-day moving average. If it can do so, it's actually a decent play. Roku, you would think, would do similar because they are a device for watching TV over the internet, and you can see how it's starting to actually find support even when the market has been down. And you can see this best if I probably go into a 30-minute chart and maybe do an S&P overlay, and then you can see that relative strength starting to come in. Market down, down, down. The gray line is the market. Stock actually holding its own. So Roku might be one to watch. Not one of my favorites, but an interesting play right here. Maybe it starts to find support. I also think that some of the stocks that are in social media are getting pounded right now, and I'm going to go into two examples. I could go into many. I'm going to show you Twitter. And these stocks are getting nailed. I mean, this is not a stock that you want to be in right now. You want to have that support for them and you want to have that relative strength. But here's what I like about it. We'll go into that stock ER. the expert rating, you can see cash per share $8.50, debt per share $4.20. They could pay off all of their debt with their cash. They can weather a storm like this. Their employees are working out of their home. They don't have supply issues. People are probably going to be using more social media, not less social media. So when the market recovers, this is the kind of company that you want. I'd like to see a lower PE ratio, forward PE ratio. The trailing is not that bad. That's the type of stock. Facebook, similar situation. People going to be using Facebook more? Probably because they're trying to keep in touch with each other when they're stuck at home. Well, what's their balance sheet look like? You can see they've got cash per share $19, debt per share $4.60. Could pay that off easily. Employees working out of their home. Yeah, I think these are the kind of companies that if you went way out of the money and sold bullish put spreads, you would end up being fine on them. You could even sell out of the money puts if you were looking to buy the stock. You could generate some income while you wait. There's going to be more pain ahead. I think that for the next 2 weeks, people are going to really get scared. I've been saying this. As you put more test kits out there, you find out exactly how widespread the coronavirus is. And all of a sudden, people start associating that with, it's spreading. No, it's not spreading. It's been here. We're just testing for it, and we're finding out that it's been here for a long time. And so once all of those test kits come in, which I believe that out of all the people that have been tested, the positive rate is somewhere around 6%. When they did it in South Korea, I think their positive testing rate was around 4%. So as all these tests go out and the results come back in, then we'll actually know what the true number is, and then we'll be able to actually gauge what that growth rate is, and we'll be able to watch for that peak. So expect lots of bad news over the course of the next 2 weeks. Expect to hear about a lot of companies that are struggling, and hopefully the checks that the government sends out will help tie people over for a few more weeks, and then we'll start to see the light at the end of the tunnel. That's how we have to play it, and that's how I think things are going to pan out for us. As far as right here, right now, I think you got to sit tight if you're a swing trader. You got to wait for that opportunity to set up in another few weeks. Even then, we can expect many aftershocks. Some companies are not going to be able to make it through this. The financial crunch that they're going to go through will simply be too great for them to handle. Very, very unfortunate. You can see all these attempts at a new low of the day have been reversing, reversing, reversing. Lots of long tails under body here, and this 1OP indicator coming down. I'd love to see it bottom and give me a cross just like that. Then I would be tempted to buy one of these really deep dips down here on the notion that we are going to release one of these times and we're going to move higher. But on a release like that, I'd probably be taking profits on it because I don't know that we're going to see any legs to any move today. We've got quadruple riching coming up, a lot of position squaring there. So look for some choppy price action. The range today has been compressed relative to what we've seen. I think right now, wait to see if we get that afternoon bounce after the FOMC. I've given you some good stocks to take a look at. Walmart looks good. ZM, CTXS, RAD, AKAM might be a good play. Keep an eye on Netflix. That could also be a nice play. Longer term, if you're a swing trader, keep an eye on Twitter. Keep an eye on Facebook. Wait for that support. Look to maybe sell some out of the money bullish put spreads. Take advantage of these extremely high option implied volatilities on companies that should do well once the dust settles. Trade well. We'll see you tomorrow. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.